Well, I'm back, everyone, so soon. I have a bonus video this evening, a twofer, and this is actually a fan request. Um, and I'm going to probably add some of my own, but I'm going to go over the best growth ETFs of the year 2024, potentially, because we don't know yet. So we're going to look at some small cap ones to start off with. So IWM is a small cap. IWM is the small cap index. So there's an IWM and an IWMY, which is Defiance. So we'll go ahead and look at both of those because we haven't discussed Defiance in a while. Okay, so let me share Yahoo Finance really quick. We have first commenter here, Boss Ball Head Dog 25 says thanks. You're welcome. Hopefully the video turns out to be a good one. We'll see. And hopefully we get more of you on. Okay, so let's go here and I will give my expert opinion on some of these funds. Okay, so the iShares Russell 2000 ETF, also known as ticker symbol IWM, has traded in between 161.67 and 205.49 for this 52-week range. It's down 3.73% year to date. But then again, so is the Russell 2000. We're down to 1950 and 96. The yield is small. It's a 1.35% yield. NAV it's actually almost perfectly fairly valued according to NAV. PE ratio 12.32%. Now this one has been around for some time, since 2000. How about that? The Russell 2000 iShares ETF has been around since the year 2000. How's that? We were at 50. We were at 50.25. Let's go back here. It keeps wanting to go to a candlestick chart. And then what do we have here? Okay, so we were at 50.25 July of 2000. We went all the way up to 82.90. Came down to 42.05. Excuse me. 42.05 March of 09 when the bottom of the crash. And then we ran up. We had several run-ups and some pullbacks. 2011, we were here. We dropped here a little bit, 64.30. We peaked out again in 2015, 122.96. Dropped to 102. 173.02 August of 18. Pulled back here December of the same year. Came back again before COVID, then dropped all the way to 114. Came all the way up in 2021 to almost 225. And then we dropped from there. And then we came back again to where we are today. So this one, as you all know, I'm bullish on the ETF, but I happen to have a couple of different plays to take this one from different angles. So the one that I got into, first of all, this one is too expensive for me. Now that I'm thinking about it, let me simulcast in the Discord here. Hold on, let me respond to someone. All right. All right, we're going live here. Okay, so we are voice connected in the Discord. Just found out I have a new imposter account, so I'll have to kick that person out. Let's see something here. It only shows one of those, though. Okay. All right, so I'm voice connected in the Discord. So as far as the IWM, I'm going to go over a couple of alternatives. So TNA is my first choice. I got into some of this one. This is way cheaper, $34.85. We were actually lower than this just a few months ago. We were at $33.95 January 11th. We were as low as $21.82 October 23rd. So you're talking about, I don't know why I keep getting these ads. We were all the way down to $21.82. And then we were up to $40.01 December 18th. So this one is much cheaper and it's a 3x, which can work either to the upside or the downside, preferably the upside because we're expecting the index to be higher. So this fund has been as high as 96.51 August of 2018 because obviously when we have those run-ups, the run-ups are going to be magnified a lot further, but then again, so is the downside. But like I showed in the 401k video, ignore the downside, okay? The market is up over time. I wish most of my audience isn't stubborn, but there are obviously people outside of my audience and in my family, and those of you watching probably know who I'm talking to, so I'll look directly at the camera. There are so many stubborn people out there that will focus on one stock that's down. And when I say investing is a long-term game, even if you're old, investing is a long-term game too, because the market over time is up. So there's no reason to look and say, oh, well, this has the chance to go down 3x. Never do it. Then guess what you did? You just talked yourself out of massive gains. And guess what? That's the difference between the rich and the poor. Because poverty, remember, is a mindset. It's up here. Okay. Um, Being rich is a mindset. Okay. So when you think like that, when you think that, oh, this is a 3x to the downside, I would never touch this, then guess what? You're just guaranteeing that you'll stay in the same boat. So you know what? I choose not to be part of that. I choose, hopefully, for my audience to not be a part of that, or for anyone that follows me. I want us to all be rich or wealthy. There's a little bit of a difference, of course. Wealth goes outside of money a little bit, but I'll get off of my soapbox here. Um, the way I see it, though, like I say, the market is up over time. So a triple levered ETF, I think, is a good buy. The experts, who are wrong more often than not, by the way, consider these things risky, but I don't. Because look, okay, so it dropped here. Watch. Okay, so worst case scenario, it dropped during COVID. Say you got in at the peak, say it dropped down here and you got scarred and never wanted to invest again. But guess what? It was down half of that like 9 years before. And then look what it did like less than a year later. Okay, so say you dollar cost average down. So you could have got out here and gotten scared, taken your money and tucked your head between your legs and ran off. But you would feel stupid because other people that bought in here at the bottom and then got in up here, they made a killing. And it recovered. It didn't get back to where it was here. Actually, it almost did. It recovered here and then it's fallen here. So I mean, if you shorted it here, that would have been a good move too. But obviously it fell. But nonetheless, long story short, it's at a good buying point, I think. It doesn't pay much of a yield, but as far as a small cap play, this is my number one favorite play in this space. Now, the other one I want to look at is a Defiance one. If you're a yield max investor or you like the yield max style of investing, then the Defiance Russell 2000 Enhanced Options ETF is also an option for you. It's at $19.39. And this has been public since since November 1st, actually. So we're doing really well, actually. We're recovering from the dividend payout. It's paid out two pretty lofty dividends, and we've recovered. So that's pretty good. Since I don't know if we've gotten a dividend announcement yet in these. That'll be another video topic, of course. But if we look since inception, God, they're just bombarding me. I mean, I'm not going to lie, I'm trying to be healthier in the new year, but I didn't expect it to translate to all those type of ads. Jeez. Anyway, bombarding. Look, another one. Unbelievable. We'll just have to make a joke out of it. I wish we could give Viagra to our investment returns. Okay. So December 1st, they paid $1.25. They paid a whole dollar December 28th. That was our last one. So we'll get, oh, I missed that video. Look at that. I was too busy doing other things. I missed that video opportunity on December 28th. Oh well, my loss. But I will get it at the end of this month. So we're going to get a dividend there. So this one is actually behaving pretty stable despite paying out such high dividends. I would think, let me see, a dollar dividend per month. So that's $12 divided by like 20. It's between 60 and 70% payout in the Defiance. So that is in that space. Let's check something here. Hold on, let me go to the general Discord here. Okay, 10 o'clock on the East Coast. Let's see what we got here. Oh, look at this. He's attending both. How about that? That's cool. Rob Smith is on. Good evening, everyone. IWMY got a nice 1,500 dividend this month off of only 30,000. Oh yeah, the Defiance one. That's the one I'm covering. Small caps are going to do good in 24. I agree. I believe they are as well. All right. Now, so I spent a lot of time on the small cap one. We got several more to look at here, fan requests, so to speak. So this person asked about some other ones in the Russell space. I was going to get off of that, but I'll cover these as well. MFL, I don't know if this is a Canadian one, but it's not coming up. First Trust Municipal. Okay, I'm just gonna scratch that one. If I can't find the ticker, I need a spelled out uh, name of the fund. Okay, VONG I can find. VONG is the Vanguard Russell 1000 Growth Index fund for exposure. Now this one's too expensive, so I still think TNA is the better play. Um, Now, funny thing, we just on the podcast, if you all haven't checked it out already, on the Brewing Great Returns podcast, we were talking about our favorite versus least favorite brokers. And Vanguard is actually one that I have never tried. I want to try an account at all of them, so I'll open something there. Or who knows, maybe my next employer will make me switch to Vanguard. We'll see. But I've definitely used Fidelity, Schwab, Ameritrade, E-Trade. I've used Webull. I've used Robinhood. So pretty much all of them except for Vanguard, I've used. I like Fidelity a lot. Schwab, I had the 5-day issue for funds to clear, which by the way ended up working out. I have to say, in fairness, because I bought in cheaper the SQY and the Coney. I bought in cheaper than I would have if I had rushed. So maybe all things work out in the long run. Anyway, still 5 days is a long time to wait. Yield. Another thing I'll say real quick before I go into this. So my previous employer came up with something called real-time payments and stuff like that. There's a platform called Zelle. I'm sure you all have heard of. They came up with that. So I think that obviously we're into the 21st century. I mean, we're well into this century now. Uh, I don't know why money still takes 3 to 4 days to move. It should be a real-time transfer. We have the real-time payments technology now. I don't know why that's not more of a thing. Anyway, that's the end of my 2 cents there. All right, so as far as the Vanguard Russell 1000, I'm not liking this play just because it's too expensive and there's cheaper funds to be had for sure. This one looks like it's been around since 2010. It's gone from 1396. It had like the U-shape dip here and it's exceeded that. So it's close to all-time highs. So I would probably have to stay away from this one. Uh, Let me see if this is a ticker or if he's just saying the word MOAT. No, he does mean Van Eck Morningstar Wide Moat ETF. This is $83.80. Let's see what he's seeing here that I may not be. The price doesn't stick out to me. Okay, since May 2012, 1889 all the way up to 83.80. Highs, relatively high PE ratio, 52-week range. This is all at 52-week highs. Jesus, they're bombarding me still. Um, this is all at 52-week highs. So I would probably avoid this one. I'm not sure if this is exposure to what. I'm not quite sure. Let's see now. Okay, the next one, I'm not going to look too much at this. I would have to say this is a no, at least for me. VIG, Vanguard Dividend Appreciation Index Fund. I like the name of this, and a lot of you all should too, but the price is astronomical. 170.48. Can they split or something? Okay, since '06, this was 49.18. It's been as high as, again, it's close to a 52-week high here. It's close to it's actually at an all-time high, essentially. It's back to 2021 highs. Yield is 1.88%. I'm kind of wondering what this person's thinking here because uh, you can obviously have much better dividends than this. All right, what's next? VUG. VUG. I'm going to throw in some other ones, the Fidelity zero cost ones, and I want to do some further investigation because actually Blake was telling me yesterday that they're not truly zero cost, so there's some kind of nominal stuff right there. And I think, if I'm not mistaken, he said, "Oh, it's right there on the prospectus." Like I just gotta read, basically. So I'll have to look into that for sure. 31277. What is up with? So I'll just go ahead and say, so Varden is the guy that asked me about these funds. These are way too expensive. I wouldn't touch these with a 10-foot pole. Since '04. Look at this. I mean, these are just like they've done well over time, but What do you expect these to get to, like $1,000 in the next 10 years? These are just way too expensive. There's much better funds to be had. Let me go ahead and look at FISROX. That's one of my favorites. I have my HSA in this one, 1661. Look at this. Total market exposure, the zero, Fidelity Zero total market exposure, $16.61. This is the kind of stuff I'm talking about here. A lot of people are newbie investors. They can't afford to spend $300 on a fund. So something like this is way more appealing. A large cap blend fund since 2018. Look how this is done. 1004, it's gained 60% in 5 years. So why not something like this? Even with the crash in 2022, look at this. It's up like 25% from there. I did phenomenally last year in this one. Let's see here. While I'm at it, I don't want to ramble on too long, even though I was born a rambling man, as they say. Uh, let's see. What do we have here? Sold 10,000 Friday. Have to wait till Wednesday to buy more Coney. Been in Schwab jail for weeks now. Well, what exactly happened to you? Because I had the whole 5 day issue, but I woke up and thought I was in the 21st century, but then I realized I was still in like the 19th century with their policies. But apparently, every broker is like that. So much for 10+ year investing career. Where have I been, huh? I've never had that issue though. I've never actually had that issue, but you'll have to tell me what you're in Schwab jail for. While we're at it, I'm gonna go to the Fidelity site and let's look at their cost information for these funds because I'm usually not a mutual fund guy, but I do want to find out because I know these aren't truly free. So the FISROX, I'm on Fidelity's site right here. I think I'm getting a cold again. Can't believe it. Let me know what you all think about my 401k video, by the way. We've got more live participation here than we had on that one. But it's just 401ks. It's not like it's yield max or anything. It's just a 401k that's 2x over time. I mean, who gives a crap about that, right? Those type of videos don't really SEO. Now, okay, FISROX. This is to me, Varden, pay attention here because this is a better alternative, I think. Look at this, 26% rate of return over the last year, 8% over 3 years, 15% over 5 years. Over the life of it, 11.42%. It's a 3-star fund, but the NAV is 1661, so much cheaper. Asset turnover rate. Now, here's the thing. So, Blake, if you're watching expense ratio, it's got 0 and 0. So compared to the average mutual fund, like watch this. I'll give you guys a big one that really rips you off. Okay, Columbia Funds. The company I used to work for sold these funds. Watch the difference here, because this is what's called an A shares mutual fund, the retail mutual fund. I would steer clear of these at all costs. So look at this here. The expense ratio is 1.05%. It's front loaded, which if you all know anything about mutual funds, you pay this up front, which they just take this up front, and you pay an advisor for this one too, most likely. Now, what I can't figure out, because I'm actually in this one from back when I worked for the company before my last one, when I worked for financial advisors, and this was on their short list of brilliant funds that they recommended, which turned out to be mega crap. And I don't know why this one is such mega crap because this was an Amazon, Microsoft, Visa, Nvidia. I can't believe this. This is in Nvidia and it's down. It was down last year. So watch this. Okay, since this would be the hypothetical growth of $10,000 since 2014. I don't believe this one. I think this is Fidelity, but I don't believe this chart because I can tell you I've been in this fund over the same amount of time. I didn't put 10,000 in, but I'm down. So let's see here. This one, it's saying that 10,000 would be worth 30 something thousand by now. I don't believe this because I can tell you mine, I put 2,000 in this one and it's barely what I paid for it with the dividends reinvested. I'll have to do some research. Anyway, this one sucks. This is just an example of a high expense ratio, or excuse me, mutual fund. This is why I steer clear of these types of funds. Okay, let's see what else. We got a couple more, but I'm going to go over these. So where? Oh, I wish he was on right now. Let's see what we got here. Oh, look who we got here. Uh, Graham Jervis, greetings. Where can I find the Discord? I'll put that link here. I did fix the link in my main channel page. Uh, I can only give it to you if you join, though. So let's see. Let's try to find it. It's in a community posting. So let me go to my front end of my channel here, and let's see what we got. Okay, and I'm live streaming there too. So here we go. It's on my. Let me do this here. Let me coach you all up on channel navigation a little bit here. I'm gonna do this. Why is my camera so? I want you all to see more of me. There we go. See more of me, huh? All right, now let's look at this. I'm gonna show my channel's main screen. Oh, here we go. All right. So my links that I have a bunch of links here. I have a Twitter link, which I don't use. I have an Instagram link, which I don't use. I have a Discord link, which I do use. I have a Patreon link, which I haven't done enough with yet. I have TikTok. And then I have a business website that I haven't done too much with. And believe it or not, I also have a business card too. Isn't that cool? So came up with this September 2021. Anyway, so the Discord link is here, but I'll post it in the chat over here. Excuse me, can't get my throat clear tonight. All right, let's post this here and then we'll read some of the other comments here. Okay. So there's that one. This guy joined a few live streams ago. Nice to see you back again. Mike Johnson, Music to Motion. I did great on Coney this last payment, but used margin to buy extra shares. Ooh, that's something I wouldn't do. There's other YouTubers that do that, but that's just not something that I do. They've given me margin in one account, and that reminds me, thank you for bringing that up, by the way, because in one account I accidentally used some margin and I want to sell off something because I hate paying interest. I love collecting interest, but I hate paying interest. Or shall I say, I'm not interested in paying interest. Haha. Okay, before the payout, now it's down below my cost basis. May have to sell some at a loss if I get them. Yeah, that's scary. That's why I don't mess with that. Lesson learned: use much less margin. Well, you're probably listening to other YouTubers. Like there's this guy that just does everything on margin, basically, and I just think that's really risky. So I don't do it. But then again, I don't have the subscribers that he has, so maybe a lot of people take his information over mine. Who knows? Buying stocks with unsettled funds and Schwab lends you the money to close the trade. I think they do it for you a few times, but after that, it's jail time. Oh, you must have done it a lot then. Only can trade with settled funds. Yeah, that's kind of where I am too. I'm not a big Schwab fan myself, as you all know. Okay, so here is the Discord link again. We have Michael on with a big New York Yankees ring. But I will have to tell you, Michael, your New York Yankees ring is not as impressive as my solid gold dollar sign ring that I got from Dollar General, or actually that I got. I don't even remember where I got this, but I wear this as a goof sometimes because I mean I'm not married or anything, but I always I get amused easily, and walking around like this, that kind of makes people's heads spin, you know. So anyway, nice ring. Anyway, long story short, so Vanguard ETFs are great. We've got VGT, VUG, MKG, VONG, VOO. We're gonna look at VOO. Just because it's a high price doesn't mean you should be scared away. Vanguard account, you can buy them as partial shares. That's what I thought. But the thing is about that, you're going to have less shares. And I just think the way I look at it, if you have like $100 to spend, I'm a small investor fan. I like to help the little guy if I can. So if you have like $100 to spend, you can buy a fractional share of that, or you can buy the TNA, or you can buy the FISROX for 1661. So make your money go further, accelerate your gains, right? I want to see people go from poor to rich, which is partially mindset, right? Okay. Or you could sell that New York Yankees ring and buy more shares, right? I'm sure that's worth a pretty penny. Just have to tease you about that. Okay, so now that we know the Discord, we got that stuff figured out. Let's see if any of you are listening on here. Oh, look here, he joined right away. So our ranks are growing on Discord. We don't have 1,000 like Khmer does, but we're getting there. I'm going to try to put more effort into this. So we've got, let's see, 98 offline, 18 online, and I have an imposter I have to clear out pretty soon. So it looks like we got 2 more of you that joined our ranks. Welcome. Welcome to the family. Okay. So we got that. So the next one we're going to look at, next one on the list is going to be, did we look at VIG and VUG? So guess what? The next one is VOO. Excuse me. We're going to look at VOO. But before we do that, I want to look at two other Fidelity funds here, the ones I'm in my HSA account on. I just want to pick ones that I'm invested in because you guys know I always pick only the best funds. It's a little bit of a joke, of course. But when I'm ever in doubt about funds to pick, doubt is a good thing, and I never have to worry too much because thankfully I'm equipped with advanced financial forecasting equipment such as the 8 ball, which helps me make decisions not just with investing but in life. I go to the 8 ball for pretty much everything. It's like my therapist sometimes when I want it to be, which saves a lot of money because instead of spending like $1,000 a month on therapy, I got the free 8 ball, which sometimes doesn't want to work. Sometimes it needs to wake up. Okay, let's see. Did I ask it a question? What's it telling me? Reply is hazy. Try again. Haven't gotten that one in a while. But you know what? Then again, I didn't ask it a question. Oh, I was going to ask it. Okay, is VOO a good fund? Let's see what it says. We'll find out the answer here. We'll get an answer here for sure. It's caught between a rock and a hard place. Darn. It's trying to say without a doubt. There you go. So take that to the bank. VOO is a good fund because the 8 ball says, without a doubt, it's a good investment. So there you go. Okay. And that's a joke, of course. Uh, but it could be. I mean, it could be a good investment. All right. So we'll go ahead and look at it since I've been teasing you all on it. This is the Vanguard 500 index fund. This is for the S&P 500. This is just way too expensive. You could get, I just feel like your shares, you want more shares with the same rate of return because then you're going to get even more, I feel like. So from October or November of 2010 to now, we went from 100 to, so we've like 4x'd in this one. So it would be good to time travel, of course, and go back and get it here. It's got a 1.46% yield. Anyway, all right, enough of that. I'm going to go back and look at the other Fidelity funds that I'm in. Let's see. Let's see. Where are we? I'm in the account. Navigating different brokers is always a challenge. Huh. Where do I see? Can't believe this. I feel like an old person. No offense to anyone that's old, but you know, darn it. Where? Oh, all positions. Duh. Okay, so I have Fizrox, 150 shares of that. FNILX is the next one. FNILX. I did a video on this last year. These all turned out to be really good. So FNILX is 1691. I feel like for some reason I felt like this was higher. Where were we a year ago? Let's see. So when I bought into this a year ago, we were only at like 13 something. So we went up like $3. Okay, so that's pretty good. So we're close to an all-time high in this one, but again, this is a lot lower, so you get a lot more shares, so your money goes further, right? Let's prove that theory real quick because I like to see things in real time, so to speak. So I'm going to pull up a blank coaching spreadsheet here, um, and let's do this. Am I sharing my screen, by the way? No, I'm not. Darn it. You all need to keep me on track here. Oh, let me go back to Yahoo real quick since I wasn't sharing VOO. Let's see. So I'm on FNILX right now. So my point. So I'm going to compare FNILX to VOO, even though they have nothing to do with each other. One is S&P, one is large cap index. So here's the deal. So if you have like $100 to spend, we're going to do an example. We'll go back to VOO for a second because I showed the price here and the chart, but the price is too high in my opinion. Got a lot of assets under management for sure. Um, but yeah, so there's that. That's just too high. So here's the deal. So I'm going to go to a blank spreadsheet here and we'll do a real life comparison here. So we'll have VOO versus FNILX. So we're saying we're going to put $100 into VOO versus $100 into $100 into FNILX. And let's see what we come up with here. Survey says what? Survey says share the screen, right? Which we're going to do. Okay, so blank spreadsheet, here we go. All right, so if we're going to take $100 and put it into VOO, versus, and this is where I want to show you your money's going to go further in a smaller, saying they're going to do, just say they'll both do, let's make up a number. What are they going to do this year? Hold on. Are they going to do 40% this year? We'll know in a second. Um, Darn it. Without a doubt. There we go. So 40%. Case closed. All right. So just saying both are going to do 40%, right? Okay. So VOO, let's see here. VOO. All right. So 437.99, and I hear Discord blowing up. Whoops, I didn't do equal. 437.99 divided by 100. So that's going to get you, wait a second. No, hold on. 437 divided by 100. Oh, hold on a second here. So you're only going to get, actually, it's going to be, instead of one share, it's going to be like 0.43799 shares. Okay. Whereas if you were to put this into FNILX, which is a lot cheaper, this is what I'm trying to illustrate here for those of you that say, oh, I don't care about the price, I just put in fractionally. FNILX, hopefully this will be eye-opening for you all. So this is only $16.91. So look at this difference here, okay? So say you have $100, $16.91. Oh, come on. Okay, so you're going to take $100 and then you're going to divide it by 16.91. So you're going to have five, almost six shares, right? Okay, so your shares at this point, if FNILX is 16.91 and it's going to go up 40%, it's going to be magic 23.67. Whereas if VOO goes up, VOO, and it's 437.99, and it goes up 40%, it's going to be 613.19, right? So the thing is, what's going to happen then? Your $100, you're only going to make like $61 off of that, right? So let's see here. This share times this. Is that right? So I don't know if I'm doing this right. Let me do this one first. Actually, I think I was. This times this, you're going to have $140, right? Whereas if this one is up 40%, I'm trying to figure out here if I'm doing this right. Um, okay, if you've got 437, you've got $100, right? 437.99. Wait a second. This is the this is the shares you're going to have here, right? I think it's 0.2283. And then say this times this. See, you're going to make the same amount of money, but the point is, okay, if you're getting like a dividend or something, or if you have a split, you want more shares in the long run, okay? Because you could take this money, you could take your gain and say your $40, you could reinvest it, right, into more shares. And then you're going to get like another almost two shares here, whereas you can't even buy a whole share over here, right? So long story short, I just feel like it's better having a smaller fund that's going to appreciate, have better upside, right? Okay, with all of that being said, now let's see here. Okay, we haven't gotten any more comments, but we got 72 or I wish we had 72. We got 17 of you watching. If we flip the numbers, we'd be close to 72. Anyway, where were we here? Well, I've been rambling for almost 40 minutes. That's crazy. Crazy stuff. Okay, what else do we have? Jeez, more of these ads. All right, where are we? Discord. Okay. VMO, international exposure. These are all really high, I feel like. Oh, Invesco. I haven't seen Invesco. 955. So here's a cheap one. He finally found a cheap one. How about that? Oh my God, these ads are insane. No, that's not what I want. Okay. This one, since 1992, this one has fluctuated a lot. Might be a good buying point. We'll see. Might have some upside. This one, I might actually, of any of them, I might buy into this one. Let's look at the IYW. IYW, let's see. US Technology Trust, $123. Yeah, I could just get this. I could get cheaper. Okay. VGT, VGT, the Vanguard Information Technology. God, these are so expensive. But you're right. You can dollar cost average in and buy a fractional share. IXN, Global Tech, 6782. That one's more reasonable. This one might be a good one. It might have some upside. It bottomed out here. It topped out here. I think it's close to an all-time high. See, the thing is, I just get leery when these are at all-time highs, you know. That's the thing. Okay, MGK, Vanguard Mega Cap. So I do like Mega Cap, but this is just really expensive. These are all really expensive, and they're also at all-time highs. SCHG. Oh, that's one of you all's favorites. Schwab. It's talking about Schwab. Speak of the devil, right? This is again close to a all-time high here. I know you all love this SCHG fund. Schwab ETF. I don't know much about this. Why do we want to invest in Schwab, actually? I'm not sure. Anyway, all right, let's do some comments if we have any more here. Ah, look here. Wow, an OG. Check out PEY. TD Travels, regardless of number of shares, 40% the same profit. I agree. I think the smaller investor would like to have more shares. I would prefer a cheaper fund myself. Made it. Okay, well, I covered most of yours. Try QGRW and QQMG. All right, as bonus, we'll do these real quick. Let's see here. QGRW. Wisdom Tree. It's got to be a good one with a name like that, right? Wisdom Tree, US quality growth. 12, 22, 22. Okay, so we've gone up from there. We've gone up like $12. Okay, not bad. So this was relatively new. We might have some good upside for this one. Is this just US stocks? What is this one indexed for? Not quite sure. QQMG, we'll look at that one. QQMG. Oh, ESG. ESG, I'm a little iffy on. Um, I'm sure it'll do well because they're going to make it do well, but let's see here. 2692. So we're about flat from 21 till now, but this could have a good year. We'll see for sure. So, all right, I think that's about. Let's see. Rob Smith says QQQ is the best capital appreciation fund in the market. That's one of my favorites. Also, I'm actually looking at the T triple Qs. It sucks because it's 409 a share. So buy the T triple Qs, the triple levered. It's the same logic as TNA. I won't go look at it because it's actually the same logic as the TNA for sure. It sucks because 409 a share. FSPGX is only 29.75. It's tripled. Agree, these funds are so expensive. So there's some good ones that Rob Smith gave you all. It's ESG, same as QQM, QGRW killed it this year. Looks like it. Also like Win. Yes, that Win Resorts. That's definitely a good one for sure. All right, you all. MOAT. I looked at MOAT already. So yeah, I covered that one. Wow, this is a long video. One of the longest I've done in a while. All right, you all. It's been real. It's been fun. Like, comment, and subscribe if you haven't already. And we will see you all. What's this one? Uh, FXPGX. I'm in and in love. Oh, good. That's good for you. Yeah, we'll do a part 2 of this one. So thank you all for tuning in. We will see you all very soon. Take care. Have a great night.